Let's see. Wayne is asking, what's the minimum someone needs to invest with their IRA in one of these deals?
The agreements that we put in place with John to get all the extra type of help and consulting and the conference calls, having to pay for that, the agreement that I have in place, we are not being compensated on any deals that are less than $200,000, if that makes it easy for you.
Okay, good to know. So that would really be a minimum.
But it could be done for any amount. Let's put it that way.
And I think by the time people get to this stage, they usually will oftentimes have several retirement accounts, several IRAs, and kind of a bunch of money. It just tends to accumulate over the years. So I don't think that's really a problem, really.
Sure.
Ralph asks, what are the fees that a client pays to have the IRA converted to a self-directed IRA?
Yeah, it's 3% of the transaction amount, and the cap on that is $7,500. So, whatever, take the IRA loan amount and multiply it by 3, and the maximum fee paid is $7,500.
I think that one thing that was a little confusing at first is that what this does, it converts the IRA into self-directed IRA, but there's really no specific investments that are part of this. This is just to convert the thing over, and from there the client has to have some idea of where they want to put their money. Is that right?
Correct. It goes into an account, whether it's a corporation or LLC, depends on the situation. That's a checkbook. So it sits in the checking account until you're ready to pull the trigger.
So you can write checks on anything that's approved, in those approved things.
Any approved investment, correct. If you want to go to real estate closing, you would just, obviously you could wire the money or get a cashier's check, whatever you need to do.
Where I could see this being important would be someone who wants to buy a business or wants to buy a building, for example, and they don't have the equity piece. Have you had clients that have done that have gone into the self-directed direction in order to fund a deal they wanted to do and they didn't have the equity piece or the down payment or whatever?
That's a large portion of what we do because our clients come from being out in the field trying to get commercial deals done, and we just use this as an alternative. So I'd say a big portion of them are we call bridge financing, really.
Okay, so that's really big. There are for deals where there isn't a lot of down payment or equity money, and the best way to get the deal done would be a combination of a loan for maybe 70% and then some equity or down payment money for the other 30%. And this would give them an opportunity, a way to raise the money.
Yep.
Yeah.
Exactly.
Yeah, and that's what, on my end, just of my experience, which is all I can share with you, we don't use these to give investment advice. The only times I've been involved in these is to help fund a commercial transaction, buy a business, buy a building, get a different type of transaction done that they thought was impossible or told was impossible. But then when I look at a personal financial statement, which again, when I see on a PFS, a personal financial statement that there is some IRA money available or even securities that are non-IRAs, I know we didn't touch on that today, but John is who helps out on the securities loans also. I then know in my brain if they're short on equity or short on down payment to get on the phone with John and his team and talk about how we can use their securities that, again, are not in an IRA or use their IRA to get the transaction done. That's the only reason I use this.
So John's, the team can handle both the securities loans and the self-directed conversion into a self-directed IRA.
Correct.
Exactly.
Okay. Have you had very many people that have used this for things like factoring, for example, and accounts receivable? Has that been very common?
Yeah, especially with doctors, where you have a group of doctors. They can't factor their own receivables, but they can factor their other partners within their group's receivables. We've had a number of clients use it for that.
And I'm sure most people know this, but some people may not be familiar. In factoring, you sell, if you've got people that owe you money, you basically sell that receivable, the fact they owe the money, you sell it to a third party who pays you immediately a smaller amount. So you don't have to wait to collect for, let's say, a doctor doesn't have to wait 4 months to collect from an insurance company.
Correct.
It can help your cash flow tremendously. And these are pretty high interest loans typically, and they are fully secured.
Mm-hmm.
So that's a good area for someone to get into. I think we're approaching the end of our call. I do want to make sure we answer any other questions. Do you have any parting thoughts in the meantime?
I'm actually looking at something here I'd like to just read real quick.
Right.
In terms of what's the opportunity. It basically says the self-directed industry is growing at a rapid pace and is expected to see upwards of $2 trillion enter the market over the next 2 years. Some of the latest numbers show over 45 million IRA holders in the U.S., with less than 4% of those funds are held in non-traditional assets, meaning self-directed IRAs. So you're looking at 96% of the IRAs out there are not self-directed. And it says this number is expected to increase significantly over the next 5 years as more and more individuals and their financial advisors attain a greater awareness of self-directed IRAs. So that was a Roth conversion. Yeah, it's huge.
$2 trillion, 45 million IRAs are out there, and only a few percentage of them are self-directed. And
Correct.
the money that's just sitting there, and this is my mistake, and I just have to say this has been an eye-opener for me, is in thinking that I had to just invest in what Wall Street wants me to invest in. You know, these stocks and bonds that are just gone nowhere, just a year after year after year, you know. And I could all this time have been investing in things that I really know and understand better than stocks in my own ventures. And I mean, that makes a huge difference because somebody can really invest in what they know and what they're good at instead of investing and getting stuck with Wall Street and with all the shenanigans that can go on there. This is big.
Sure. Yep.
Yeah, and I guess my closing comment is, you know, I'm just thinking about what I use this for. I use this for a conversation piece. It's simple, and nobody expects me to be a CPA because that's not how I hang my shingle out there. So I get the conversation started. I realize that there's an amount there that can help facilitate a possible transaction. And as the scripts I've given before, that sounds like a viable transaction. What I'd like to do is set up a conference call with you and our tax professionals, and we can go from there. And not once have I had somebody say, no, thank you. It's just a great conversation piece that 9 out of 10 times leads to getting some business done.
Great.
Thanks a lot, John. Thanks a lot, Richard. If there's nothing else, I guess that's it.
Excellent. Hey, thanks so much. Really appreciate it.
Thank you, Richard.
Thank you.
Bye-bye.